Hello traders, Gary Wagner here. Just about 11 o'clock in Honolulu, 4 o'clock in New York on Wednesday, the 12th day of November 2014, and this is the daily report for gold and silver. We do have the precious metals, specifically gold and silver, trading moderately lower today, with gold off approximately $4 on the day. You can see current print approximately $11.59 and change. The low has been $55.70 and the high has been $70.10. Silver also trading lower, but only slightly lower, off about 3 cents on the day, $15.64. The low $15.48, the high $15.88. More on silver in a little bit. First, I'm going to talk about the trade alert that we sent out today. So first, to the trade alert that we sent out early this morning, we had our stop roughly at 1183, and 1183 really put us above all of these tops right in here. But at the same time, as we saw this market come down, it genuinely found a little bit of support at approximately the 1149 or the 61% retracement, and as you can see, began to move up. As the market was trading roughly at about 69 and 70 this morning, my sense was, although these green candles, this is a Japanese average chart, very, very short term, 230 minutes, we could see that they were beginning to condense or compress. But my concern was because it broke back to the upside. In other words, we were not looking at a scenario that was similar to what we had been witnessing. Dramatic sell-off, market trade sideways, sell-off, market trade sideways, sell-off, market trades sideways, or find support. Rather, we actually have now begun a range in which we saw the market move from 1131 up to about 1177, 78, then back down to 49. And so my sense was that we were in a different type of market than we had been previously, really through the end of the month of October into the beginning of November. And because of that, I didn't want to have as much risk as we initially put on the trade. My sense was, as long as we stay really above this 1175, and that's these tops here, we'll be safe. We are short at 67.50. If by chance we do get stopped out, our risk parameter is really gone down to what, 5, 6, 7, about $8. So a very, very small risk on the trade. And if it does have the ability to break, we're still in the trade at the same time. So that was my rationale behind trailing that stop as tightly as I did. And my sense is that there's no doubt, I still think that we do have ultimate pressure to the downside. The one real caveat is where these lows are sitting in terms of a long-term chart and therefore a long-term model. Let me show you what I mean. So traders, we're looking at a weekly chart. Weekly chart has basically two fib retracements in there, one from about 400 up to the record top, the second one from about 700 to the record top. Fibonacci harmonics, 50%, 1168, 1157. And when we look at this particular reference point, this 50/61% retracement, what we see is really the potential for some sort of a double, actually a triple bottom at this point, if in fact the market found support and then bounced back off here and then began to bounce up. And there is no doubt there is a model to be made for the possibility of that occurring. However, based upon the straightforward fundamentals that have been driving the market down, as long as they remain constant, meaning stronger dollar, and as we saw this market down in trading last night, we also saw the dollar trading lower. Once the dollar popped higher, of course, we were really back to the races again, so to speak. And the S&P is currently trading at around 2036. So it's trading at a new record high, and the dollar has seemed to recoup. And that's where we had this additional pressure coming in. As long as that remains constant, my sense is that this market will probably trend lower and trade under some pressure. But I do want the caveat, and I do want to be cautious about the fact that this point in which we are at could genuinely become a support level? My sense is it won't. However, anything is likely. We have to be ready for any occurrence. So that's the rationale behind trailing the stop, and also the current forecast that I am looking at in terms of gold. And so traders, what about silver? Well, if we take a look at this low right in here, this happened back in 2010, February of 2010, comes in at around 1442, call it 14 and a half. That to me is really the next level of any kind of real support in the market. We're currently trading at about 1560, call it. I believe that if gold continues under pressure, we've got another dollar drop at the same time in silver. This has been Gary Wagner, wishing you as always good trading. Tomorrow I will be in flight to Indonesia, so I will have time to put out a written report, but not the video report at our regularly scheduled time. I will come out with the video report, the weekend review, from Jakarta on Friday. We'll talk to you then. Bye-bye.